The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Tuesday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN, 9:06 a.m. We got 24 minutes to go until the start of trading today, and we got markets in negative territory to kick things off. A little bit of trading to negative territory right out of the gate. Zooming in on the S&Ps, you see the move happening at about 7:30 a.m. this morning. A little bit of tensions between China and Taiwan potentially playing into that sell-off in our markets as tensions continue to escalate there. We'll jump into that story in a moment, but speculation being that might be the 20 or 25-point pullback that we got in these markets. We have the S&Ps right now down about 25 points, trading at 41.61. You see the tech stocks pulling back as well. They drop about 100 points at 7:30 from 13,750. We make a low at 13,650. We're bouncing a bit. The Dow had some big-time strength yesterday. Check out that move. We give back a lot of it today, though. 33,851 in the Dow, and the Russell down about 15 points at 22.57. Crude continuing to rise, as I mentioned in the update. 65.84 the high, 65.22 right now. And gold off about $2, catching a little bit of a bid, though, in the last few minutes as you had the market sell off a bit. There's your volatility on the 730 bar on gold. We were trading about 1782. We're now trading 1789. Silver right at $27. Look at that run we had on yesterday in silver. Silver right near the highs we had yesterday, $27 on the dot right now. And notes and bonds. We're getting some higher price and lower yield. The 10-year is up 6 ticks at 132.16. The 30-year is up 22 ticks at 158.10. And we'll jump over to the volatility index right now. The VIX getting a little bit of a spike on this market pullback right near 20. So much for a 16 handle that we had last week. We're looking at 1961. And it's really, what's the correct word here? You can learn a lot when you see a spike with the VIX. Folks, we're basically sitting at all-time highs, right? You're sitting at 41.61 in the S&P, just for some context here. You put this thing on a daily, you can barely see the pullback. We're sitting at all-time highs, and just the slightest little sell-off of anything sends the price of premium through the roof. I mean, look at these jumps, right? So much for 1538, so much for this little chopping around 17. Remarkable that we get that type of volatility coming into the biggest earnings event of the season potentially last week with all the big tech stocks. Just like that, a little negative action in the market, and we're right back to 20, which correlates pretty much to the lows that we had in this market anytime before the recent run in this VIX of eclipsing kind of 19 or so. We got below that level in the middle of March. We really got that below that level in the beginning to the middle of April, and now we're back to about 1955 in that volatility index. All right, let's jump into the earnings as we talked about. We started off with CVS. CVS topping estimates as vaccinations and testing boost drugstore sales. Getting into the numbers on CVS, $2.04 a share versus $1.72. They take in about $700 million. I mean, it's a decimal point because their revenue is so high. They take in $69.1 billion versus $68.39 billion expected. Net income, $2.22 billion, up from $2.01 billion a year earlier, excluding items, $2.04 a share versus $1.72. We covered the revenue. How about guidance for the year? It expects 2021 earnings between $6.24 and $6.36. And after adjustments, $7.56 to $7.68. Not sure what the expectation there is. It reiterated that its full-year cash flow from operations, not a bad cash flow. How about $12 to $12.5 billion of cash flow for the fiscal year? It had lower rent store sales in the first quarter of the year because of accelerated demand in March of 2020 and a weak cough, cold, and flu season. So you had a real acceleration for their comps, right? It would make sense. Everybody kind of flooding during March of 2020, stocking up on essentials, the front of the store on CVS, probably getting a lot of traffic flow. This season, not as much of a need to stock up, and a weak cough, cold, and flu season because of the precautions taking for COVID. Same-store sales across its pharmacy and friend store combined were up just 0.4%, compared with growth of 9% a year earlier. Same-store sales for the friend store fell 11.4%. I mean, this is where I would love to see this article even tell me, comp it out to 2019. 2020 is an anomaly, folks. Of course, same-store sales for the front of the store, CVS, when basically grocery stores, the aisles were empty, right? Similar stuff happening at CVS. They have some of the staples that we use in homes. So not really fair to be comping this out. This is the reason why we're seeing so much volatility in the market. Comping it to a 2020 number is just not fair. It's not practical. It doesn't make much sense because usually you're using comps to 2020 to tell you what you might see happening in 2022, right? Tell me how I grew from 2020 to 2021 so I can stipulate how I expect a stock to grow in the next coming year. Just doesn't make sense what we're seeing in the last year. That's why it's more important on some of these to take a look at the trends we saw from 2019 potentially and how those may play out to what we might see in 2022. Nonetheless, strong numbers for CVS. Monday's close, they're up nearly 14% this year. This is CVS shares. Talk about a decent valuation. You're talking about a company that's valued at $100 billion, and today you're going to open even higher at about 79 for CVS shares. All right, we got Pfizer numbers as well. Pfizer, we're opening higher. We're about bid ask of about $40. You see the run-up we had yesterday coming into their earnings. They come out with the numbers this morning. We spike a little higher. Pfizer numbers. Let's see. So there's a couple stories out here. They plan to file for full FDA approval of the COVID vaccine at the end of this month. So what that would, I guess, mean is that they would be allowed to directly market this shot themselves. They have their earnings in here as well. Let's see when we get into it. So the company received U.S. authorization of its COVID vaccine in late December. That was emergency authorization, I believe. Since then, delivered millions of doses, as usual, as we all know, I should say. Usually it takes the FDA nearly a year or longer to determine whether it's safe and effective for the use due to the once-in-a-century pandemic. The FDA permitted the use of the shots under the emergency use authorization. The authorization grants conditional approval based on 2 months of data, not the same as a biologic license application, which requires 6 months of data and secures full approval. So the company said it expects to apply for an emergency use authorization for a booster shot. So that's talking about variants. And I believe they're going to apply for the full authorization as well. Nonetheless, their numbers, getting into the nuts and bolts, 93 cents versus 77, revenue 14.58 versus 13.51. Full year sales for Pfizer, 26 billion from the vaccine, up from its previous forecast of about 15 billion. How about that, right? Pfizer, we're a little bit positive, giving back some of those gains, though, this morning. We'll pull up the daily. As you can see, a lot of optimism already in this chart. Where you go back to the run we've had since March, you're talking about from $33 up to about $40, let alone the run you had when you started to get the data for the efficacy of the shots. From about 33 to 43, you gave it all back, and boom, we're just like that. We're back at about $40 for Pfizer shares. Moderna, jumping over their chart. Quite the acceleration as well. Moderna, we're basically slightly in the red, 185.50, just ticking across right near all-time highs for Moderna as well at 186.02. All right, folks, stay tuned. We're going to come back from the break. We'll be talking to our man Kevin Hinks from the TD Ameritrade Network. We'll be talking fast market. We'll be talking earnings. Big week of earnings this week still. We just talked about Pfizer. We talked about CVS. We have Under Armour out as well today. We'll take a look at that. And we'll chat about what we have coming up on the Fast Market program at 11 a.m. Eastern Time with Kevin Hinks. We'll be right back, folks.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
Welcome back, folks. We have markets in negative territory. We got about 12 minutes to go until the opening bell. Let's jump over to our man, Kevin Hinks. Folks, every trading day, 11 a.m. Eastern Time, Kevin Hinks, Alex Coffey, the team at TD Ameritrade Network. Fast Market is the program, breaking down hypothetical option trades, covering the market, what we have going on. We're still deep into earnings season, folks. A great time to check it out. Kevin Hinks, good morning.
Good morning, Tommy. Happy Tuesday. Looks like we're off to a little bit of a soft start here this morning, but really good, another good economic data point from Redbook this morning. Redbook, that is, comparable sales from chain stores, discounters, and department stores. The number comes out weekly, up 14.2%, Tommy. That is a massive increase, and that should lead into a strong retail sales number coming up in about a week or so. So good numbers there, but the market looking lower regardless, Tommy, as we start the day.
Yeah, I mean, remarkable action, Kevin, when I think about it. I talked about early in the program saying the VIX, pretty quick, the VIX, right, spiking to about 20. All things considered, we have an S&P sitting at 4161 right now. Basically, we're just off all-time highs. Tech stocks pulling back a little bit, surprising after we had such strong earnings from the big titans last week. But this market, a little bit jittery when you see that VIX, Kevin, spiked almost 20, so much for 17 or 16 maybe last week. As this market, and I know there's some speculation, maybe there's some tensions between China and Taiwan escalating over there, but a little bit of dicey action when I see that VIX spike so quickly on basically sitting right near all-time highs this morning. We had some earnings going on as well, but what do you look for when you see a VIX that's, can spike from 17 to 20 in a heartbeat right now on basically just a kind of a slow move of 20 points in the S&P, which is not much considering where we've come from?
Tommy, I think the tensions between China and Taiwan are real, and I think there's something that has the market a little bit concerned. I think that's why you're seeing the VIX climb for little or no reason, and the future sold off about, right before 7 o'clock Chicago time, right before 8 o'clock your time, you saw futures break. And I think this is why. I think people are starting to read about the issues going on between China and Taiwan, and I think that's causing a little concern.
Yeah, I mean, we see a market that's almost, and it's almost remarkable to even say the words from my mouth, but almost priced for perfection right now in terms of, risk to the downside, risk to the upside. At a time we have the S&Ps flirting with almost 4,200 right now. You combine the economic indicators in there, so many jobs we got to make up. We got a big number coming out Friday for April non-farm payrolls. And I agree, Kevin, as in this market, any type of news or any type of events that might price in anything that isn't almost perfect, and these are my words, but things are priced pretty well right now. And we saw it last week with some of those tech stocks, man. They crushed it out of the park. And it was obviously priced for perfection when you have a company like Apple or Amazon finishing almost in the red after the numbers that they put up last week. But it's still earnings season, Kevin. We got CVS out this morning, Pfizer, Under Armour. They keep coming tonight. What are you guys going to be talking about on the program coming up at 11?
Well, today in the first segment, I know we're looking at Activision. And then, let's move Activision. And then we'll look at Lyft, of course, and then General Motors today on the show. So 3 names coming out with earnings: Activision Blizzard, Lyft, and General Motors.
Nice. And it is remarkable. Last week, of course, was all the big tech stocks, but it is remarkable, like the nonstop feature in terms of, like we said, Pfizer. I think we get Under Armour as well. Lyft, sure. Uber is coming up as well. And Kevin, when you have a week like this week, right, where a lot of the forward expectations were, all the speculation, of course, is on the non-farm payroll number because of where we sit right now in the economy, right, where we got to make 8 million jobs up. And Chairman Powell, of course, the focus is going to be, he is looking for real numbers. They're not going to budge until we start making up the jobs we lost. We're at about 8 million under where we were prior to COVID. I imagine that's the number he's looking at most of all. What do you see happening, Kevin, when you think about, I always love the dichotomy of good news becomes bad news, because then the Fed might think things are better than they might have been previously for expectations. What in your mind are you looking? Because what if we get estimations about 1 million for the non-farm payroll number on Friday for jobs added? And I always love this market we're in now, man, where too good of news could be bad news, because then the economy's too good that the Fed might pull out some of, whether it's the bond buying or the rates. How do you think about something like that as we come into this number? Or actually, if we gain too many jobs, the market might be worried that stimulus might get a pullback from the Fed.
Yeah, and that's what you have to deal with. I mean, I'm sure there's a lot of frustrated people out there that saw the earnings in Apple, saw the earnings in Microsoft, saw the earnings in a lot of these tech stocks that were incredible, yet did not guarantee that the underlying went up. So, yeah, there's a lot of names. Like, obviously, some of them did well. Facebook did well, but even Facebook has come down off those numbers. So this is why when you see, we talked about it on yesterday's show, when you see stocks run up into earnings like we had at the end of March, beginning of April, now when the actual numbers come out, the trade is a little less obvious, right? Good earnings, okay, we've already run 19%. Good earnings have to be there, and so there's just a lot to go through, and you've got to be prepared for anything and everything, Tommy.
I think we can learn a lot from this market, Kevin. I think we can learn a lot from watching your guys' program, Fast Market at 11. I don't know if there's any other time I've seen where you could have multiple equities, right, beating, Kevin, on a quarterly basis revenue by almost like $10 billion and trading lower by the end of the day. But we're living in interesting times, man. There are some expectations for some of these companies that are pretty grand. We saw it on display last week, and we'll see it continue on this earnings season. And we look forward to the program coming up at 11 o'clock, Kevin.
Thanks for having me on, Tommy. Always a pleasure.
My pleasure as well. Take care, man. Folks, tune in every trading day, 11 a.m. Eastern Time, Fast Market on the TD Ameritrade Network. Kevin Hinks, Alex Coffey. Great program, great time to tune in. Download a Thinkorswim demo account. You can click on the banner right on the front page at TFNN.com. They do a phenomenal job of breaking things down. As they said, they're talking about Activision. So Activision, I have the Analyze tab on the Thinkorswim platform. You pull up the Earnings tab. They're out with their numbers. After the bell tonight, you're talking about a $4 move priced into Activision, $91.15 right now. So give or take, just shy of about a 5% move. Lyft out with their numbers. They're coming out with their numbers as well tonight. You're talking about a $57 stock, almost the same type of a move. So a little bit more volatility, probably rightfully so, in some of those ride-hailing companies. Uber is close as well. When are they out? They're out tomorrow. Uber's out tomorrow. A little bit less of a move on Uber. They have a little bit more consistency as they've upped their food delivery business during the pandemic. Lyft not quite capitalizing or able to capitalize in the same way on that type of acceleration. But I always check out the program if I get the chance, folks. I encourage you to as well, especially when we're deep into earnings season. All right, S&Ps. We got about 4 minutes to go until the opening bell, as Kevin talked about. We're going to talk a little bit about that China-Taiwan escalating tensions when we get back. Because I think we all learned something in the last 14 months, folks, in terms of being priced for perfection. And you never know when something may pop its head up that might just completely change the landscape of investing. And man, if you start getting geopolitical tensions involving China and aircrafts and potential, I don't want to call it war, but man, there's some serious tensions out there. China, they're not messing around. The market paying attention for the first time this morning, down about 20 points. We'll be right back, folks, for the opening bell.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Chart. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open. Markets right now in the red, catching a little bit of a bid on the opening bell. We get the S&Ps down about 19 points right now, trading at 41.66. The NASDAQ 100 off 114. Dow off about 99 points right now. So jumping to one of the headlines, 7:30 in the morning. So what happens is an announcement from Taiwan that Chinese jet had been detected by the country's Air Force, sparked chatter across the trading desks, though largely dismissed as a routine event. Not sure that that's, is that a routine event that you got Chinese jets going into Taiwan's airspace? Just in Googling some stuff, right? This is just yesterday. Now, Business Insider, they love their clickbaits out there as well. But this is just yesterday, folks, okay? Fears of a Chinese attack on Taiwan are growing, and Taiwan isn't sure who would help if it happened. It's a tough geopolitical issue, and you're seeing things escalate. That is the difference here going on, all right? So this was yesterday. You're seeing China continuing to poke. Whether that comes to a head, unfortunate, it would be unfortunate if so, but it's a risk. It's a risk that the market's starting to quantify with a little bit of selling this morning. But guess what? Once true supply and demand start to come to fruition in terms of the opening bell, they're buying the dip, folks. S&P's down only 17 points right now, trading at 41.69. All right, let's jump over to Under Armour. Out with their earnings this morning, a little bit of volatility in both directions. You spike higher on the initial earnings announcement, you then dive to 23.19. Right now, you're down about 1.5% on Under Armour. Their numbers, strong numbers in a big way for Under Armour. Hikes full-year outlook sees demand returning. Anytime you have a big hike of a full-year outlook, usually sends things higher because it's all about the future. They expect full-year sales to rise by a high-teen percentage rate compared to a previous outlook of just the high single digits. You get into the numbers. They earned 16 cents versus 3 cents. They took in $1.26 billion versus $1.13 billion. Net income grew to $77.8 million compared to a loss of almost $600 million a year earlier. Again, not really a fair comp. A year earlier, the world not the same as it is right now, that's for sure. Excluding one-time charges, they earned 16 cents a share. That's better than the 3 as we talked about. Sales rose to $1.26 billion from $930 million a year earlier. They should have all the 2019 comps in here, folks, because it's really tough to gauge what they were doing a year earlier. But the best thing to compare it to is maybe the estimate, which they beat. North America, sales up 32%, where they grew 58%. In the international division, online sales rose 69% across the businesses. Yeah, and they talk about last year. In a year ago period, the sales tumbled more than 20%. I mean, you're just seeing some grand expectations, folks. Under Armour said it now expects full-year revenue to rise by a high-teen percentage rate. Analysts were only looking for 10.1%. It's calling for 2021 adjusted earnings per share to be in the range of 28 to 30 cents. The prior range was 12 to 14, and analysts were looking for 20. I mean, what's going on? What's going on is, folks, all of these equities have some pretty wild expectations, and even all of those numbers we just talked about on Under Armour, you're still down about 1% right now, trading at $24. Let's jump around to some of the FANG stocks right now, see how they're trading. Amazon, down almost a full percent right now. Apple shares down 1.6% right now. Microsoft, down 0.8% right now. Facebook shares down 0.8% right now. We'll jump to Netflix, down about 0.4%. Let's jump over to some of my favorite stocks. Disney, catching a little bit of a bid, 185.03. Quite the slide for Disney yesterday. You open, trade to 189.22. Disney, for some context here, folks, if you're looking into getting some Disney, if you missed the boat on Disney and you're looking to get into it, not a bad area to dabble with a partial position in here. You know, we're almost going back to where we were basically to start the year. You're almost back to where you were on December 11th, that high of 179.45. Disney's got a lot of support right at this high of December 31st. That high is, I believe, 183.40. Yeah, 183.40. We make that high on December 30th. We make the same exact high on December 31st. That potentially a B point. You go from an A to B, C to D, folks. Your A point really right down there near about 120, give or take. Your B point is 180. You're talking about a $60 A to B C to D leg. That brings us to about 220, 225 potentially, the A to B, C to D. But Disney's got a lot of strength here at this 183. You could begin to dabble with a partial position if you're looking to get into that equity. I mean, we've had one solid bounce in February. You got back down there early March, we bounced. We got back down there in late March, we bounced. And we got back down there yet again in April and bounced off about that 180 to 183 level. Disney trading 184.53. And we'll jump to Uber. They got their earnings this week. Uber, quite the pullback last week on Labor Secretary Marty Walsh coming out saying maybe their employees should be categorized as employees and not contractors. Interesting, I call them employees as I started to say that, right? No pun intended. But their workers should be categorized as employees instead of contractors. I think that's an overblown sell-off there. Yes, that matters. You know, the labor secretary under basically a new administration that's only been in there about 6 months, if he wants those workers to be classified as employees, that could weigh on the company Uber. But boy, when you categorize that risk and you calculate the risk into this equity, all I'd encourage you to do when you try and quantify these risks, folks, is that you have Uber. This is already a known risk in this company. It's already a known risk when you have a Democratic president with a very liberal labor secretary from one of the most liberal states in the union, my home state of Massachusetts. Gotta love it. And so that type of language should not be too surprising to the market. What I just put out there is it's a long way from becoming law. When you think about the steps that would need to be taken and the challenges that would take place in court. Now, state by state, you may get some differences going on here, but on a federal level, I see it very difficult to have something blanket statement get done against the gig economy when you have California already voting on the issue, one of the most liberal states in the union, and the citizens of that state saying, hey, we get that we want people to have a livable wage, but these workers are contract employees. So we'll see how it plays out, but I don't see a huge impact on that. And we're getting a little bit ahead of itself, folks. But something to keep in mind as years progress is that the eventual business plan for these companies is to have no workers driving the cars, to have self-driving cars. Now, that might be 10 years down the road. That's not something we're calculating into today's trading action. But just keep it in mind when you hear these stories and hear that it could be the death knell of some of these companies, is that the business plan for these companies is to eventually be running self-driving vehicle fleets. Okay? So no matter how that plays out, if they drag it out in court long enough, they won't need drivers. But Uber down about 2.3% today. Lyft out with their numbers. Lyft driving 3% down at about 55.33 for their numbers. Let's jump to commodities. Crude up about 1.1%. We got a high in crude of 67.98. You're backing it up to March 8th. Right now we're at 65.60, and we'll jump to gold. Gold down about $1 at 17.90. You back up gold. Gold's had a nice bounce off this 1,700 price point. We're now at 1,791. This is a weekly we got up there. You take it all the way from the run we had from the COVID lows of last March of about 1,450. You run up to 2,089. You have a 61.8% retracement right to the level. We bounce on there in March. We bounce again towards the end of March, and we're trading about 1,790 right now in the price of gold. And we'll see if that trend continues to the upside in the yellow metal. All right, folks. I mean, look at this. Look at this S&P Weekly, right? This is what I was talking about to Kevin Hanks. Any little blip we get, and you got that VIX spiking. We at the S&P is basically just chopping around right near all-time highs, and we have the VIX this morning pairing some of the gains, but that's quite a bar, trading at 1914. Stay tuned, folks. We'll be right back after the break.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. And just like that, we got another little sell-off going on. We got the S&Ps down 29 points right now. We got the Dow off 125. Tech stocks pulling back. NASDAQ 100 down 173 points. You see the sell-off right from 9:30. We were at about 13,696. We're down about 80 points from that price level, 13,684. So one of the things that'd be interesting to see how it plays out in terms of all the talk of taxes, et cetera. One of the rules talked about here, talking about the inheritance tax and how that plays out, and the step-up rule for figuring out the basis for capital gains. That's the word I was looking for, the basis. So interesting to look at how this plays out here. One of the huge loopholes that occurs when you talk about dynastic wealth is the ability to transfer assets with and have a step up in terms of the capital gains basis. So under current rules, whoever inherits shares receives a so-called step up in basis. So what it does, it wipes out completely any capital gains liability, and then what that does is it sets the basis at the time of the transfer. The difficult part about this is that, you know, a lot of great arguments get made in terms of double taxation, right? It's not fair if people pay taxes for their entire lives and then they want to pass on that wealth to their children, that it gets taxed again. Very reasonable argument to be made, okay? And these get so difficult, folks, with so many loopholes, et cetera. But the one thing I want to talk about with this one in particular is that the wealthiest of the wealthy never actually pay taxes on this. And that's the difficult part. So you have the likes of, you know, whether they talk about Bezos, and of course, some of these numbers are staggering when you talk about the type of tax bills they could get. And here they're talking about maybe Bezos heirs facing a tax bill of $36 billion. But what they should say is because Jeff Bezos himself may end up paying no taxes on all of that capital gains. Because what you do is you never close out the trade. You never accrue the capital gains. You pass on those shares when you pass away, and the basis gets stepped up at that time. So actually the taxes never get paid in this type of an instance. When you look at, they have a great example in this article talking about Larry Ellison. Okay, because what you can do is, folks, you just never sell them. You take out a loan on the equity that you have in those shares. You never sell them. You then pass along those shares to your inheritance, and the basis gets stepped up at that time, and all of that accrued income during your entire life never gets taxed. Now, and I would just want to slide down to get where we are. Come on, here we go. Larry Ellison, the founder of Oracle, purchased Hawaii's 6th largest island in 2012, and he had almost $18 billion of stock pledged to a loan as of September in order to do that. So he doesn't sell his shares, right? He pledges $18 billion of shares. He takes out a loan. He never pays taxes on the income that he's raised there. Just something to think about as you see all these numbers thrown around, folks, because nobody likes taxes. But it's not, and I'm going to use the word fair, and it is not fair how some of these richest of the rich pay no taxes and then pass it on without paying any taxes. Just doesn't make sense, folks. Now, one point that this article does make, which is probably valid, is that many of the richest of the richest of the rich, there's other loopholes out there. They might be able to find some more loopholes, use all their money that they have to pay tax estate planning and maybe skirt it as well, whereas you might see some of the not so wealthy but still having huge capital gains. They are the ones that might be hit the most. Nonetheless, it's got to be talked about because it makes no sense that the richest of the rich are able to pass on those shares to their heirs while never paying taxes on themselves, and then they don't pay taxes on them, so you have billions and billions and billions of dollars getting passed through. I mean, this is one rule, one law that could raise almost $50 billion a year. So it's just interesting when you look at how that plays out, because I think if people realized actually how much money is not taxed for the wealthy, that the conversation would go a little bit differently of how things go. So we'll see how that plays out. But you're going to hear a lot about it as we got to pay for the debts we've built up. And it's not just the debts that we've made in the last year or two, folks. They've been coming to roost for a while now. All right, let's jump around to what else we have going on in terms of stocks making moves. We covered some of the headline numbers with CVS, with Pfizer, and we covered Under Armour as well. Avis out with their numbers. They lost 46 cents a share, smaller than the 216 loss that the market was looking for. Revenue beat Wall Street forecasts as well amid a jump in demand and more solid pricing for car rentals. You actually have Avis negative on that pre-market. We'll see where we go right now. There you go. We're down about 4.7% today on those numbers. Avis, quite the run for these car rental companies, right? You back things up for the run we've had from pre-COVID levels of about 50 to $6. We're trading at 90 right now. We're pulling back on the earnings, but quite the run we've had. The stories around just the stories in general about these car companies, they cannot get cars fast enough, folks. They're going to auctions to buy cars in order to be able to rent them out. Not how that business plan usually works. Usually you have companies that basically buy brand new cars. The likes of Enterprise comes to mind the most. They buy fleets of vehicles that are brand new at a very big discount. They use them for about a year, maybe two, and then they sell them off. They don't have to deal with all the servicing of the vehicles, right? They make sure they're new. They make sure they're reliable. They get a great discount for buying a fleet of vehicles. No, not the case right now. They're buying any car they can get their hands on at an auction because they can't keep enough cars on the lot. Avis, though, pulling back on their numbers. And Hertz, HTZ, I believe. Yeah, they're still in BK maybe, and that's why that one's not coming up right now. But we'll see how that one plays out. But the rental car companies, interesting. Smile Direct said its current quarter sales will be hurt by an April cyber attack, 10 to 15 million. Interesting that such a small attack for a company like that is material. The maker of the teeth straightening system said it successfully blocked the attack and restored its system. The stock lost 9.2%. Boy, what a big one that was. SDC. I mean, is this... So that's quite a pullback. We're down 15% right now on that. Now jumping into the Analyze tab and pulling up the fundamentals for this company, you're talking about a company that's valued at $3.5 billion right now, folks. And if I read that story right, they're saying that a hack cost them $10 million and you're down 15%. I don't know if that's the full story there. You know, they're out with their numbers as well. So let's see what we got. Is that right? Yes, it is this morning. So I see. So they reported it sees first quarter earnings per share of 25-cent loss versus a 9-cent loss. and they recorded the cybersecurity incident. So cybersecurity incident on top of miss on earnings, and you're trading down 15% for Smile Direct this morning. All right, folks, we're getting a little bit of a sell-off here. It's continuing to drop. We got the S&Ps down to 41.48. You're about 40 points off where you were this morning. NASDAQ 100, really remarkable when you think about where we were last week. Is that peak level of optimism there coming into Thursday, right? That was coming into, you got Apple earnings Wednesday. We had Amazon earnings after the bell on Thursday. We reached 14,064. And since then, folks, we've given up just like that. 500 points in the NASDAQ 100. We're down 1.5% right now. S&P's down just shy of 1% right now. You get the Dow down 0.7. And check out the Russell down 1.8% right now. Bitcoin down $2,300 at 55,000, and crude 65.16. Stay tuned, folks. We'll be going over what else we have coming up for earnings. We'll be right back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. S&P is negative 39 points right now. Let's jump around to some of those tech stocks. As we have the NASDAQ 100 down 210 points right now. We'll jump. Amazon shares down about 1.2%. Some of these numbers pretty staggering when you think about the market caps that are being driven lower. Apple shares. This one is the most perplexing maybe of all, down 2.8% today. We come into their earnings at 134. We're now trading at 128. They crush it out of the park last week. The news comes Friday. that the EU might be coming after them for some antitrust concerns. You got Apple trading at 128.72. You back this thing back to a 3-year weekly. We're now back to where we were trading basically in August in Apple. Remarkable when you think about that. They just came out with, I think it was an additional $90 billion share repurchase program on top of what they already have going on. Apple 128.69. Right now, you're talking about a market cap for Apple, $2.146 trillion. We were at 2.26, I believe, coming into their earnings event. We're giving up about $100 billion in market cap in Apple, just like that. What else we got? Microsoft shares down about 0.9%. Google, one of the strongest equities out there recently, down 1.5%, giving back some of their gains as well. All right, jumping back to what else we have going on in terms of stories I had up here. Yeah, the crypto craze. Ether, 1,500% jump, just the start for the crypto faithful. Some of my friends and I just on our group chat talking about this morning. Man, where does this end, right? All the hype in crypto right now. We'll see how that goes. Bitcoin really holding up well when you think about where it's been. Bitcoin negative on the session, $2,200. You put this thing on a daily. Zoom in on the recent action we had. You had a pullback from 65,000 the day Coinbase goes public. We dipped to about 48,000, and just like that, we're at 55,000. We bounced right to a 61% retracement of that full move lower to about 58,000. We'll see if we pick up some steam to the downside again on Bitcoin. 55,550 as we speak. All right, folks, should be an interesting day in the markets. We got the S&Ps down 40 points. It's not even 10 in the morning yet. We got earnings going on. We got non-farm payrolls coming out on Friday. One of the things I talked about with Kevin Hanks, we'll see a little of negative action right now, especially interesting. There's going to be some grand expectations, folks. 1 million jobs for Friday. Maybe the market getting a little dicey coming into that number as well. Stay tuned. Basil Chapman's up next, folks. Fast Market at 11. Larry Pesavento, Steve Rhodes, Dave White, Tom O'Brien, all this afternoon. Have a great Tuesday.